All right, cool. So interesting week, right? Obviously we had that liquidity grab on EU this week, which we'll cover in a bit, but something to note before everything, right, is the first thing, let me move my mic a bit. The first thing to achieving a favorable trade is to get direction right. Right, and over the past 3 weeks, right, we've seen the direction show itself. Right, now getting into the opportunity hasn't been the cleanest, but the most important step for me, in my opinion, has been, right, to make sure that the direction is correct. Because if the direction isn't correct, you're more than likely to lose the trade. Right, I see a lot more trades with members that are more so, you know, you hit SL and then the trade goes in the complete opposite direction, and instead of, you know, actually getting, you know, stopped out, then having, you know, the move go in your favorite direction. Right, so if that is you, if not option two, if scenario 2 is you, then I wouldn't be too worried, because that's just more so you know, alternating and fixing up your models, not necessarily your trading plan. Right, your trading plan seems to be doing fine because you're getting the direction right, and that means that you understand the market. Rado, are you speaking? Yes. Can you not hear me? Oh, I was about to panic. I was about to start this over again. Yeah, cool. Is your volume down? Can you not hear me?
Yeah, got it.
Okay, cool. Yeah, so anyways, right, if you're getting direction wrong, then more than likely you're reading the market wrong, and that's more so a trading plan issue. And if you're, you know, getting stopped and then, you know, having the real move go in your favor, then that's more so a model issue, because that dives more into your entry, not necessarily your bias and, you know, how you read structure, or how you read overall structure. Let me reword that a bit. Right, like a key example right here would be Chris, you know, that I believe it was AJ where you showed me, and that was extremely unfortunate. Right, and but the thing is that you got the direction correct, you just didn't get the entry correct. So you've pretty much done the hard part. The hard part is getting the direction straight. Right, the not the easy part, but the easier part, in my opinion, is to actually get that entry in. Right, but that obviously varies if you use limits, if you use reactions, or if you try to just continue order flow, or if you catch disruptions, right? That's obviously depending on you, but I'm just speaking as a whole. But yeah, anyways, right, we've seen this manifest over the past 3 weeks, right? And we've seen this react from our POI, right? And because this is now taking this out, right, we now have a solidified high, right? Which is what we talked about last week, I'm pretty sure. So even though there is a bullish structural range intact here, right, there is an internal break of structure that supports overall direction, which is what matters, right? So I wouldn't be too stressed if you haven't gotten any decent opportunities in here, right? Because it was a bit messy, and it was a bit sloppy. So keep in mind, right, your targets are liquidity. Let me see. Right, these are your targets. This is what you're aiming for, right? So it's okay to not necessarily, you know, miss. It's not bad for you to miss these scenarios here, right? But it is important to note, right, that you have a bias in play based on where liquidity is going, right? And the only reason these are my targets is because this broke and it solidified high low retracement. Okay, so as you're diving in, right, looking at H4, right? Remember that we said this could have been the first time that we legitimately saw a discount. Which we did, right? And do you guys know why I always prefer a discount instead of just like a continuation here, right? Even though this is technically a discount on smaller time frame, right? But I'm just talking about overall picture. Do you guys know why I always prefer this?
Balance.
I'm sorry?
Because of balance.
Balance? That's a good answer. That's a good first answer. What's another good answer? Oh, not another good answer. Another answer. I'm sorry. Right, key, not a keyword, but a hint would be just think order flow, how it's built, constructed, etc. in the form of structure. Not higher probability, not higher probability because that isn't absolute. Well, at the same time, none of it is absolute, but in terms of higher probability, right, I mean, technically, yeah, the deeper, the more probable, as long as every structural range is still intact. But the word that I'm looking for, or pretty much what I'm looking for, is to think about it from a perspective of order flow, right? So let's say, right, we have a downtrend, right? We have a breaker structure, liquidity grab, new structural range, optimism, discount, right? And then we start moving higher, right? So if we start moving higher, right, and we see an interruption, maybe a small pullback, and you catch the smaller time frame continuation here, continues higher, right? Oops, continues higher, right? Same thing. All right, the reason why I always prefer a type of discount before we get a move up is because we are assured a full impulse, in my opinion, right? Because if we are looking for these entries here, even though they will provide good intraday stability, if this is maybe a daily time frame, right, there is always the possibility, right, that you can get caught up trying to take these continuations, right, and then you get taken out by a pullback, which is then meant to reach the discount, right? And it's why I want the discount, because I want the liquidity to be taken, right? Keep in mind what we talked about in the liquidity video. Liquidity charges the move and gives you more result, okay? So if we wait for that discount, then you will catch a full impulse, right? So it's why it's important not to just acknowledge, right, SC inefficiency. It's also important to acknowledge overall direction and where you are in price in terms of the overall leg if you're in a premium, right? But this also varies pair to pair, right? Some pairs will give you the deep retracement, some won't give you the whole thing, because this right here is pretty much what EU looks like, right? In terms of here, right? And it's why I was anticipating that discount, right? Because if this was meant to continue and we're targeting, right, previous high and previous high, right, then we're realistically, right, looking for any type of discount so that then we can get the full impulse that will take out a major liquidity point, right? And that is, you know, the reason why I prefer to wait for those discounts, right? Obviously, there are very good discounts in smaller time frame that will provide good result, right? Like for example here, right? Let's actually dive in. Let's review this once more. Right, so remember, I would have considered this weak order flow, and I would have considered, you know, maybe a type of unwillingness here if we took this out. But eventually what happened was we showed it our hand, new structural range intact, discount, and then you get the full impulse. Okay, so can you anticipate a discount on an overall leg? No. Right, which is why it's important to also know, obviously, your showing its hand, your optimism, your disruption, you know, and that's why those order flow concepts and those structure concepts are super important, significant. Let's see, POIs. Yep, they do, because it's that volume that creates the impulse, right? So reviewing this ugly stuff right here, right? Even though we had a liquidity grab, right, we didn't take out the point of structural invalidation for DXY. So what does this create? Actually, let's see if I can do this. Cool. It creates a type of divergence, a type of instability, right? A type of disproportionate price action, which generates this, right? So the only issue, the one thing that I didn't like, right, is that this happened at 1 p.m. at very late New York, right? Which isn't a time that I'm looking at the charts, which is 100% okay as to why I missed the move, right? And you were actually given a decent opportunity late New York yesterday, right? So technically, right, if we're looking at EU alone, okay, this could easily be interpreted as unwillingness because we took a previous low, right? So the only thing that discredits this bias is if we take this out, right? Because if this mitigated something, which it did, right? Keep in mind the scenario that we talked about on, what was that, Thursday? Right, it was actually H1 wick. That was actually where I derived that setup from. Yeah, H1 wick. Right, as you can see, right, there is a clear mitigation there, which led to a break of structure. So when that is taken out, this is referenced as disruption, right, which happened immediately, right, at New York Open. So because the disruption happened, that is now a clear sign of disruption, a clear sign of a flip in direction, right? So technically this is bearish, right? This is bearish, and you can see that there was a time where this wanted to reverse, but it didn't. So that's another type of disruption, right? We took out the previous mitigated point, and then we also had a reaction that was taken out. So any move down here, right, as you can see, right, is carrying a lot of volume, but the thing is there is a lot of supply, a lot of demand, and there's also a lot of supply, right? So in this scenario, I don't really care for volume in terms of this time frame, right? So now the issue, right, was when you're thinking SCs, right, just because an SC has been mitigated doesn't mean it's now invalid, right? Because we mitigated the open, generated a new impulse, right? And then we came back for the 50%. So even though we're overall bullish, right, we're overall bullish now because of the major intraday disruption, right? So this shouldn't be seen as a BOS. It should be seen as a continuation BOS because our leg is bullish. Continuation BOS, right? Mitigation, liquidity grab, right? Now the issue is that we didn't receive any type of discount, right? Which is okay, in my opinion, right? It's okay. I don't mind it. I think we don't need to trade every single scenario, right? We don't need to. This is the only time you got a decent pullback, but it still wasn't even at equilibrium, right? So that's okay. So I don't really mind missing this move. I more so care that I got the direction right in the long run, right? Because now, just because I missed that scenario does not mean I missed the trade. We have our liquidity sitting here, right? And there is a good chance, right, that maybe we can even react from a POI up here or anything here or anything like that that can generate a type of pullback to maybe give us a discount so that we can then actually go and take out the liquidity. That is how you build the case, right? So don't see this as, oh fuck, I missed the move. See this as, oh, it's showing its hand, right? Perspective. Let me see, POI. Yes, that's actually a good conclusion. That's a good conclusion. The thing is a liquidity grab is a continuation BOS, but a continuation BOS is not a liquidity grab. Does that make sense? Right, because you can have multiple continuation BOS in a full leg, right? But it's only until the continuation BOS creates optimism, shows its hand, that this is now a liquidity grab. Right, so that's a good conclusion. I like that. Thank you. I like that. Cool. So that's something for you guys to know. Perfect. Thank you. Thank you, Zen. Anyways, right, I'm actually gonna make a video on this. Okay, I'm gonna make a video on this. Right, because when was it that I gave you guys, that I showed you guys that EG markup? Let me look real quick. Let me find the markup real quick. I can't find it. Can you guys, if anybody finds it, I don't know why my computer never lets me search for my own messages. I think that's weird. But yeah, let me see if I can find it real quick. I remember I said G. And if anybody finds that markups that I sent you guys about me wanting EG to take those highs a couple days ago, can you guys at me, please? Let me see. No, that's too late. I don't remember what I said in those messages. Let me see if I can do it on my phone real quick. Okay, so yeah, I can look for them here. Because I'm trying to note which day I told you guys this. Okay, did you find it? Somebody find it? Let's see. Yes, let me pull these markups up. Perfect, thank you, thank you. Okay, let me pull this up real quick. Right, let's see. So these markups was H4. Right, so there is a reason why I said this. I expected these highs to be taken, right? And the explanation is here. Right, so I'll just make it short because I want to make the actual breakdown. But essentially, the last time we had a significant low, right? Let's think. Overall, the last time we had a significant low, right, was here. And when this was taken out, the overall leg is here, right? This is your overall swing leg, right? So thinking major intraday, right? Our major intraday, right? Our immediate range is taken out, right? And that is strong. Like, keep in mind, we're deep in this impulse, right? So I see that as a significant break of structure because one, momentum, right? Two, we took out our legs. I mean, we took out the preliminary leg, even though we're still in our overall leg, right? And three, this. Let's read this, right? Which is right around where my entry was, right? And so when I'm reading structure here, right, in terms of intraday as a whole, right? We have our structural range that took out structure. That is our preliminary idea, right? So the thing is though, you see I'm trying to make this fit, right? We have volume obviously here, right? And I don't know if this actually reached the low there, no, but there's either way, this is where the volume started to create this change in character, right? By changing character, I mean there's different, there's a lot of zigzag here, but then there is one direct impulse here. So this is one character and there's two characters, right? And something I like to note is if this character breaks, right, then more than likely we'll see overall downside, right? So the thing is that this mitigation here does not matter to me. I don't really care too much about that mitigation. Why? Because that's considered picking a low based on minor intraday, right? So I care to see order flow. I care to see internal structure here, right? So our minor intraday, right, high takes out multiple lows here, new structural range, pullback. Once we take this out, solidified high, low retracement, new structural range, right? So we're in our structural range, right? But now it's our job to read order flow, right? So what happened here, right? We see a potential POI there. We have a liquidity grab. So let's zoom in, right? Liquidity grab because the liquidity was taken, right? And we now have a break of structure of the immediate leg, generating a bearish bias. Okay, so our point of invalidation, right, in terms of structure is up here, but in terms of order flow, it could be here. Okay, oh wait, I'm host. Hold on one second. Okay, Sergio's not on the call. Or Sergio, let me see. Sergio, I made you host again. All right, cool. Anyways, right, in terms of structural invalidation, it is here. Order flow invalidation is here, because this is the final push up that created the move that broke structure. So we have a technically, right, a disruption, but I don't want to call it a disruption because it could still be seen as a liquidity grab, hence why we took the liquidity and we held structure, which maintained, the bias, hence why intraday target was met, right? So now the issue, right, as we're coming into session, right, so it's 7 a.m. Right there, 7 a.m. right? The thing is immediately after session, right, we came up and we took this out, right? So typically I don't like to take, these continuations in terms of, seeing this structure this push down and then a mitigation and then a continuation. That is much too linear for me. I don't think trading is that easy. I think that's extremely linear. And the only way, right, that I would have considered a continuation is if this impulse took out a previous low, right? Because what happened here, we actually had a full impulse that took structure, so that then this and then this makes a lot of sense to want to take an execution, right? If it follows your criteria for entry, right? So, right, also considering here, right, I'm looking at closures, right? Because we have our push down, we have our pullback, right? And then we have our unwillingness that's taken out, right? Continuation BOS, right? But this is a strong move to the upside, right? And we do have price action signaling a potential reversal, right? But keep in mind, I don't want to be bearish here because of our original bias that we are bullish, right? So if you are bearish, right, then this makes all the sense in the world. That would make a lot of sense, right? But keep in mind, we're also taking out this internal level of structure based off of our overall leg, right? But momentum is to the upside, right? So as I'm waiting, we see this move to the upside. And I believe, right, so I don't remember exactly where this mitigation was. I'm looking for this mitigation here. If there was one. Okay, yeah, so you could see if you wanted to consider this a deep mitigation here. Right, if you want to consider that a mitigation, that's fine. If you don't, that's cool too, because either way, what happened was, right, we had a break of structure, right, we had a solidified high based on high low, and we created a move to the downside, and that mitigated move is now taken out. This is disruption. Disruption, right? You notice order flow, right? Order flow character here, then impulse, right? So where did we come back? We came back into this M15 wick, which is, this is where I was looking at. Let me see. Right, I see an indecision here, right, that potentially mitigated. Open up a candle. Then that candle was obviously then mitigated there. So naturally, I'm looking at order flow continuation, right? And this makes all the sense in the world now, because we just showed our hand to the upside. We have a very big break of structure in terms of low and high here, right? So also, because we took this high out, this is now seen as unwillingness, right? Because we did not break this low. So this entry makes all the sense in the world, right? We came into the M15 POI, which in itself is probably like 4 pips, 3 pips, see? And you could even minimize that to an internal POI inside the POI, right? So it makes a lot of sense, right? And notice that this entry only makes sense because I built the case for it. If I didn't build the case for it, it wouldn't make sense, right? And that is called justification, right? So I'll probably go more in depth on this in the video. I probably will do it after this call. But yeah, anyways, make it make sense, right? Make it make sense, right? The only reason I'm looking for buys is because of the momentum, okay? Because it showed its hand. Conclusion, have faith in your model. Yes. Right, that's actually an example of my disruption model. But yeah, anyways, I'll leave it at that, and you guys can see the rest. You guys see where it's at now, and now you guys see why I was very quote-unquote keen on wanting to take this high. So now the issue is, right, it's 2 p.m., right? I'm zooming in here. It's like 2 p.m. It's like 2 days. It's like 2-3. Oh, it was like 1-2 p.m. It's like 2-3 hours before, right, before the weekly closure. Right, and I'm seeing the top. Let me see if yeah, I didn't do that fully. Right there. So I see this, even though I will not sell here, don't get me wrong, I will not sell, right? There's always the off chance that this could just melt on me, right? And it killed, and I'm like literally 2 to 3 pips away from the target. So I'm thinking, right, the invalidation is technically here. Technically, the invalidation is there, right? But it's about 2 p.m. like I said here, right? So I'm thinking risk to reward. Should I wait for the 3 pips to be smashed, or and risk potentially, you know, missing out on another 15-20 pips, or 10 to 15 pips, I'm sorry, right? Or should I just take the partial that I'm meant to take at target and just lose those 3.5 pips, right? Now this is another form of justification. It's irrational for me to want to make this risk, because look at the risk. It's 0.2 RR. It's terrible, right? The odds of it hitting it, the odds of this hitting are extremely high, but the only issue is that market closes in 2 hours. So we have 2 hours to hit 3 pips, right? So I said, you know what? I'll just take the partial that I meant to take, and that's it. I'm done for the week, right? So even though this actually hit target, right, it actually didn't on other brokers. Right, this is more so what you see on your MT4. Right, so why is that feed like that? No clue. But because this happened, right, and then you had that spike here, right, I think there's a very good chance we can gap down. So I think I made a very good decision. Right, problem solving 101. Right, so yeah, that was a bit of a longer breakdown. Whew. But yeah, anyways, that'll probably conclude today. I do want to say thank you though for allowing me to post the stuff on YouTube, right? So excluding trading, right? Looking away from trading, right? RCV as a brand, RCV as a company. The hardest thing for a company to do, in my opinion, is to create a win-win situation. One where the brand itself wins and when the clientele also wins. But what we did here was we created a win-win-win situation where the brand wins because we're showing the public more of who we are, right? While at the same time, you guys benefited because you guys had a brand new course and you guys have a bunch of new material and you guys still get these Zoom calls every week, right? And we're also, the public now also has, you know, a free course, you know what I'm saying? So it's a win-win-win situation. And it's cool because there's people that don't have the correct mindset in terms of the people that we want in RCV. So now they will lose faith because of the free course. They probably won't appreciate it and they'll move on. They'll go to some other group and they'll cause chaos elsewhere, right? Whereas now the people that join RCV are legitimately committed, right? And they come in with the vibe, with the energy, with the drive that majority of you have. Right, hence why the people that join are actually very courteous, right? Hence why, you know, you guys resonate with each other off the bat, right? Even though I do advise the new members to go with the process, right? And they're very, very good with doing that, with following directions, right? So you see how we just created a massive win-win-win situation where the group will not overflow because obviously only the committed will join now, right? And so even though people are joining, right, we still keep and maintain the culture that we already have, right? So yeah, I'm happy we did that, right? And then we also, right, so like something I posted on Twitter yesterday, right? Under promise, over deliver. I posted that on my personal Twitter, right? Under promise, over deliver. What does that mean? Right, that means, right, that all I did on YouTube was post a course and post webinars that are a year old, right? Over a year old, right? So many people think, oh, that's all there is to RCV. Let me go join another group, right? And now that's a different mindset. So they're, when they see that, you know, a lot of other groups, literally that's all they provide, you know, a curriculum, whether it's in the form of a bootcamp, whether it's in the form of a course, whether it's in the form of a Google Drive, whether it's in the form of just some videos they send you on Telegram, right? And then maybe a couple webinars here and there, right? That's it. That's all you get, right? Am I wrong? Am I wrong or am I right? Right? That's not a diss. That's just observation, right? So now, right, for the people that can read between the lines, okay, they read between the lines, they see the value and they join us. So what do you get? You get the curriculum, right? You get the pair breakdowns. You get 4 Zooms a week, right? 4 Zooms a week. Don't take Sergio's Zooms for granted, please. Don't take Sergio's Zooms for granted. Those will literally change your life. I'm not joking. Right, you get that. Right, the pair breakdowns are still there. I mean, not the pair breakdowns, the previous markups are still there. I probably won't add on to that anymore just because I'm doing the in the pair breakdown section in the phase. I'm doing pair breakdowns and I'm also doing case studies. So you see case studies are a lot shorter and they're a lot more quick. They're just simple trades, whereas pair breakdowns are the overall breakdown. Right, on top of that, right, we don't just talk about trading, we talk about principles, right? Hence the the concept that essentially, I don't want to say I've put together, because without you guys, without Sergio, I wouldn't have been able to come up with it, but it's principle over concept, right? Which is what we just talked about in the reality video, right? That principle over concept, term, phrase, whatever you want to see it as, is I think, you know, one of the biggest points in value that I can give you. Why? Because it's just it's applicable to pretty much everybody, right? So, in conclusion, right, I feel we played our cards right. Right, so it was hard, but we found a way. We found a way for a win-win-win. And it took a long time. But yeah, other than that, what did you guys think of Chess Player? Yes. Or what if I'm not the one playing chess? What if I'm controlling the people that are playing chess? Right? What if I'm not the one controlling the pawns? I'm the one that's controlling the person who's moving the pawns. Right? There's levels to it. Right? And the more you can think about that stuff, you know, the more ahead you are from the average individual. Right, that's something I talked to Sergio about. I think he thought I was bullshitting him the other, like, when I told him. I don't know if he remembers when I told him that. Where what if, right, people say chess over checkers, but I'm like, what about the people that are actually playing chess? Right, pretty much one big old pyramid. That's what life is. Right, there's people that work, there's people that control the people who work, there's people who control those, right? And then there's people that control those, and those are probably the independent business owners, right? And then those are all controlled by the market, right? The market is what, you know, provides you the ability to make money, right? Whether it's real estate, forex, e-com, whatever, right? And then who controls the market, right? That's something I don't know, right? But I'm pretty sure it's somebody who controls the market, right? It's not institutions. Institutions make up the market. That doesn't mean they control the market, right? Money is a driving factor in the market, but money isn't essentially what fully, you know, controls the market. Hierarchy and everything, exactly. So the answer is, I mean, the question is not necessarily how high are you in the hierarchy, but how good can you leverage, you know, whatever is below you. Yes, cost, yes. Right, but does that make sense? That's like deductive reasoning right there, I guess, per se. First step is awareness, yes. First step, so this is something I'm confused about too. I don't know if the first step is discontent or if the first step is awareness, right? Because you have to be discontent to want to change, right? But you have to acknowledge that discontent to become aware of the issue, you know? So that's something I'm like always going left and right about. All right, that's like high level psychology there, right? That's, yeah, see what I mean? But then again, right, you have to be aware of your discontent, right? In order to acknowledge that it's discontent, right? So I might fix that tweet because I did make that tweet where discontent is step one, but you also have to be aware that you're discontent, you know? Like if you aren't aware that you're discontent, you now become a slave to it. So you see how that's like a little paradox, you know what I'm saying? And it's funny because everything in life that you pretty much want to know is probably a paradox, you know what I'm saying? And that's, you know, that's like, that fucks with your head, you know? Like time, illusion of time, you know? A is because of B and B is because of A. Exactly. And it's, you know, like it's fuck, because I want a solid answer, you know, so I can then make a foundation off it. Right? But maybe the solid answer is a paradox, and you just want to build based on the paradox. All right, so welcome to my brain. That's pretty much what goes in my brain every fucking day, you know, whether it's about sports, whether it's about this, whether it's about overall reality as a whole, whether it's time, you know what I'm saying? Synergistic catalyst. It's just a catalyst. You don't gotta sound so smart, bro. And this is how I, you know, just by sitting here and thinking to myself, that's how I came up with that reality video. Like literally that reality video, I made it yesterday, but I thought about it the day before. Right? I just write out my whatever I'm thinking, then I structure it, then I get an opinion, get another opinion, and then I make an actual script, and then I make the video. I swear I don't like think about it ahead of time, right? About all that stuff, right? But it's just like, you know, it's just a process. So yeah, I'm just in a cycle of continuously trying to one up myself until, who knows. But yeah, I could talk about this all day, guys. I could talk about this all day. Exactly. So yeah, I'm actually, I think I'm gonna pin this call. I think this is a very good call. Probably pin it in the group chat or something. Everything happens for a reason. Does it though? Or do you just react to the result and then conclude that it was for a reason after it's done? See what I mean? Right? So my knee injuries, they didn't happen for a fucking reason. They just happened because I got super unlucky. But it's because I learned from it, it's because I became a better person from it, that I then came to the conclusion that it was for a better reason, or that it was for a reason, right? But in reality, was it really a reason, or am I just concluding because I actually was able to overcome it? Does that make sense? Yeah, everything is relative, you know? So like nobody's ever right. It's just, the thing is how can we collaborate our perspectives to create, you know, a better model, whether it's in life, trading, soccer, working out, doing chores, helping your family, loving yourself, self-peace, you know what I'm saying? Yeah, exactly. Derived reason as opposed to actual reason. Thank you. That's a perfect way to put it. Thank you. Right, so I think we can end it off there. Right, and always remember, I cannot change your mindset. I can only give you bits of clarity. Right, but you can only conclude that I changed your mindset because I gave you clarity. Right, so just remember that. But yeah, anyways, I think I can end it off there. Let's see.